Yes, I just wanted to say a couple words about what we've been going through at the UUA. We decided a couple years ago that, in fact, we did want to start moving some of our assets in this direction. We were, truly inspired by the Clean Trillion report from Ceres. And I think what I've discovered, and I'm not like David, I'm not way down the road on this. What I discovered is it's pretty hard. It's not as easy as you would think. I mean, let's say with our public equities, if we decided, as we did about 4 years ago, I guess, that we wanted to have a more stringent SRI ESG approach to our international equities, we went to our consultant, which Bruce is NEPC, and I'd say they did an outstanding job of doing a search, coming up with a book, finding a lot of qualified managers out there using ESG, using SRI, and we had a meeting, picked two, brought them in, interviewed, and then within 2 weeks I just liquidated one manager, and it was actually was Boston Common Asset Management that we picked, and we've been very happy with them. So now but we want to have impact. So as I said, we're really thinking about things like private equity, private real estate, green bonds, and what we've discovered is that, well, just tell you a story. So we told NEPC we had this interest. They very quickly brought us a very interesting possibility. It was a fund that had done about 120 million very successfully the first time around, kind of in the clean tech space, and they were coming back with their second fund. And they were looking for 200. We interviewed them, and in the course of the interview, they said, well, you know what, there's so much demand for this, we're going to 400 million. And my committee stepped back and went, well, that's not the same thing. That's a different business. And so we decided, no, we weren't going to do that. So in fact, there was over demand for that. And then we've also, on our fixed income side, been working with Breckenridge, and we said, we'd love to have some green bonds in here. We've loved, and they're experts in this. So we'd love to have some infrastructure bonds. I said, Tim Coffin is here. I don't see him right now, but he's in the room. There he is in the back. And they said, well, you know what? There's so much demand for green bonds right now that you're losing yield. So it's a kind of a sluggish, herky-jerky market. And I'm enough of a capitalist to believe it's going to sort itself out. But it's not easy to do. And I guess the third thing I'd say is, back to my example about the equity choice, is that it's a whole different process to look at these private opportunities, because they go out, they do their fundraise, it comes up, you're in or you're out, and then it's gone. It's not like, Boston Common, we can invest at any point, we can liquidate some. But it's been very challenging. It's also been extremely interesting. It's been very exciting. And I do think it's essential to, at least for folks at my, UUA size, to have a consultant that can do the due diligence and kind of guide you through this stuff. I mean, Richard's comment was interesting to me, this whole thing about having a commingled fund. So we're in exactly the same spot. We have 350 congregations or something investing in our common endowment fund. But last summer, our investment committee decided that we would allocate up to 10% to private investments. And our legal counsel said, that as long as we're transparent in our offering documents, and if we say we're going to rely on the valuations from those managers, that we're okay. And so it's still 90% liquid. So and 50% of the money is ours at the denominational level. So I don't think we have a liquidity problem. But I told the story of the frustration with this private equity fund. But let me just tell you where we are. So we made this decision. We would do up to 10% private, although that's long term. We're not going to, that sleeve won't be full for years, I'm sure. But I think our first investment will be actually in a private European real estate fund. Now, they are not marketing themselves as Clean Trillion or green or anything, but what they do is, they're two different managers. We're going to have interviews and decide on one of them. But what they both do is they buy old, existing, inefficient buildings, invest capital in them to green them. They don't call it LEED over there. I forget what they call it. It's a different standard, but it's basically the same thing. And then resell them and put them to use. So, as we all know, the commercial real estate sector is a huge producer of greenhouse gases, and this really stands to drastically reduce emissions from these particular buildings that get converted. So that, from our perspective, fits right into that.